Let's get one of our favorite contributors onto the show, get his thoughts on what's going on right now in the current state of the economy. Chris, good morning. How are you?
I'm good, man. What are you up to?
Well, I'm doing a market open, and we got a lot of people here that are curious on your thoughts on why the markets are tanking. So, what do you think?
All right. So first, let's address why Enphase is up. I spoke about this when we were on Finance Junkies about 2 years ago. So it tracks natural gas. Natural gas is up right now. Okay, that's it. So any of the solar stocks, if you ever want to basically have some quick things, if natural gas prices are going up, solar is inverse to that. So what ends up happening? Well, solar technically tracks it. So solar goes up as natural gas prices go up because now what happens is people are gonna quote unquote at least to a like so certain degree think like, oh look, we have to use less natural gas, we can use solar as an alternative to generate electricity. So if the prices on natural gas spike, you're going to see the price of solar spike also, which is the panel. So that's why you're seeing so Enphase kind of up a little bit. So if you want to track like natural gas, just type up there Henry Hub, and you'll see the spot prices for that. And that's like up a little bit today. So
Chris, it sounds like you just woke up and you didn't really want to wake up today.
well, I mean, I always what I tend to do is I listen to your morning open and it lulls me to sleep. So you used to be pretty exciting, and your excitement levels have kind of gone down the last couple of weeks.
That's fair. That's
Hold on,
fair.
my dad was calling me. I'll call him back.
Okay, so outside of Enphase, look, another really aggressive day. S&P's down another 2%. When do you think the pain stops?
Whenever the Trump administration decides it has to stop. I mean, this is, in my opinion, this is all they're doing. They're putting on a lot of policies that give little to no confidence to investors, whether that be like individuals like us trying to figure out how to manage all this stuff, or even the biggest hedge funds. Essentially, no one really knows, and so people are just like, oh, you know what? I think it's time to take some money off the table, sitting on the sidelines, wait until something more concrete becomes available, and then go from there. So, but I will say this, in my opinion, I think we're closer towards that bottom when it comes to like the pain points than we are to the top. Now,
Why? Why?
well, my original thesis, and it hasn't changed, it's pretty simple. Whenever you're dealing with, the situation that we're dealing with right now, it's all about time, right? So there are certain things that you can do in a certain timeline, and then after that, you're basically effed, right? So right now, Trump has to basically get everything that he wants in his policy decision making done within the first 6 months of the administration. Any longer than that, and basically he's risking long-term problems, right?
Right.
Right. So essentially, if let's say he lets this go on for a year, okay, at that point the midterms are coming and the Democrats are cream him because there's not enough time to recover, right? 6 months, I think, is enough time for him to get all his policy goals achieved, like get the tax cuts, get them through the Congress, right? So that's one thing. Get inflation down as much as possible, so that this way there's like a nice long tailwind of upward movement, not only in the stock market but in general, like where people actually on Main Street see a recovery. And usually what that means is that interest rates have to be lower. So I think right now the key goal here is, and I don't know if you know this about Scott Bessent, but what made him pretty much famous when it came to George Soros and Stanley Druckenmiller?
He shorted a currency or something.
No, 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 no. So this was George Soros's biggest thing, but Stanley Druckenmiller was there, and then also um, Scott Bessent was one of the guys that identified a major flaw that allowed them to make money. So one of the things that happened at the time, during the like German and UK issue with the currency was that the there was an artificial peg that was put in place by the British. So when their currency started to weaken, right? Um, or I think it was, yeah. So they were basically manipulating the British pound at the time. But one of the things that happened was if you raised the interest rates to basically support the UK dollar, the UK pound at the time, it was linked to the housing market over in the UK. So the problem is there was a huge policy change because Scott Bessent was actually able to identify that, hey, look, if UK homeowners end up getting screwed over with higher interest rates, that will put pressure on the central bank to cut rates,
Right.
right? So if you remember, there's, I don't know if you know the story behind that, but essentially, housing was his big focus. And I think that was the same back then. And I think it's the same focus right now. So,
AKA he wants to get the tenure to come down, to get mortgage rates to come down. And that's where the administration is putting most of their focus on, to unlock economic mobility, not the markets.
correct. So if you think about it, if 10-year goes down, 30-year mortgages go down, that means now you're going to have a whole bunch of people um, not only be be able to buy homes, but you're also going to have a ton of people who are sitting on homes willing to actually put them on the market. And
Right.
if they put them on the market, that should raise inventory substantially. And if inventory is high, then the price of the homes are going to come down. So if you just minimize this, go to Zillow. And actually, I forgot that we're on StreamYard. I can actually show you this. Um, damn, I don't have all my data already pre-populated. Let me just get you this thing. Hold on.
I think the broader theory you're making is that, and look, a lot of people hate this theory, bro. I don't know if you've seen the comments on Twitter, but a lot of people hate this argument that we're, I guess, not justifying, but we're making sense of what Trump is doing in order to get rates to come down. What is your response to kind of that feedback that that's just justifying bad behavior by the Trump administration? Or do you think there's actually real logic to tank the markets to get rates to come down, to then get the tenure to come down?
Just listen to the people, man, like the administration, you know? You don't have to listen to us, just listen to them and what they said. There's going to be disruption. What do you think this is? You know? We need to get the 10-year down. There you go. This is the way
They've
do
quite literally been saying that verbatim,
Yeah.
So
Like
that's where I come to that theory as well.
it's very literal. Like it's not us trying to make sense of what they're doing. Like they're telling us what they're doing, you know? It's just I guess it's hard for people to understand why you would want other people to be in a bad position, you know? But it's working. You can see that 10-year coming down. It's like 11, like it's almost down 11 basis points on one day. I mean, there you go. It has to sustain. Now, check this out. If you look at this, you can already see the kind of like rents are already getting to the point where they're more normalized than what it was before. So if you look at year over year rent growth year over year, right? On average, it's actually gone down and it's normalized. Okay. So this bar shows like the left hand, the y-axis. So right here, you can see it kind of flatline and go down this way. So since 2022, average rents haven't really gone up much. Okay. The only thing is the Fed doesn't look at average rents. They look at that weird thing called what is it called? Freaking owner's equivalent rent, which basically is a data point that basically asks like even homeowners like if you rented this home, how much rent could you get for it, right? And that's one of the things that's keeping OER a little bit high. But I think eventually that data is going to make its way into the ecosystem. So right now, if people were asking me, Chris, when does this end? In my opinion, it's very simple. It's when the data shows the actual impact. So the stock market itself is not the only thing that is the goal right now. I think Trump is actually. I mean, I think the what Trump said is correct, which is I really am not looking at the stock market right now, but what he is looking at, and Scott Bessent is looking at, is yield on 10-year. So they have a target for the yield on 10-year. That's the first thing, right? Second, it's going to be looking at different impacts, like both on the corporate side, like layoff wise. So you're going to be looking at jobs data. You want enough of unemployment to rattle the cage over at the Fed. And this is the last thing. Do you know about SLR?
No.
Highly recommend you look up what SLR is and why that's important for banking. SLR is basically leverage ratios that banks have to secure. So it's basically the amount of like money that banks have to hold on to, and what type of assets that are used to calculate the amount of money that you have to hold on to. So basically, if you look it up, just go to Google, because I don't want to search for it right now. I'm tired. Just go to Google, type in Jerome Powell SLR ratios. There's legislation in the works to allow banks, especially the big banks, to hold more treasuries on their balance sheet, and it won't basically negatively impact their SLR ratio, which means that they can actually lever up quite a bit. So right now,
what exactly does this do for the markets if that happens?
So this allows banks to hold more treasuries on their balance sheet.
And that gets rates to come down. I mean, yields to come down.
Exactly.
Yeah.
Exactly.
Yeah.
So Powell actually spoke about this a few weeks ago, and basically mentioned this. If you want a really good insight, just go to Google, type in Soros. Soros, I think she's the CIO right now. CIO. And basically, like last week, she did a really good breakdown. So just go to that.
I know this lady. Yeah, I saw this. Dawn Fitzpatrick. Yeah.
Yes. You may have to forward a little bit because some of the early parts of it were a little bit like not that relevant, but I think there's one part that was highly relevant.
What's the main word? I'll just Command F it real quick. That she talked about.
Just type in New York Economic Club, I think.
No, I have the video, but what's the word she said in her?
Oh, SLR. She brought up the SLR thing.
And SLR stands for what again? Strategic something?
I think it's like the secured lending ratio.
Yeah, because usually you can just type into the transcript and find where she talked about that. Let me see.
Yeah, I saw this. Liquidity ratio or supplementary leverage ratio.
Okay, let's see from here. Yeah, this lady, she's not in the Trump administration right now, though, right?
No.
She's not right now.
Put money to work in this market.
Yeah, so we're technically an endowment, but we use the best of the endowment model and the hedge fund model, so we can react very quickly. And I think we're very good. I would argue probably one of the best in the world at connecting the dots across asset classes. And from our perspective right now, the volatility is great. I think market structure is still challenged in that liquidity at moments in time when there's a lot of volatility is challenging. So you can see a great trade, but sometimes buying as much of it as you want is easier said than done.
Do you have a favorite trade right now?
Yeah, that's a good question. So we are tactically, at the end of last year, we bought call spreads on Hong Kong equity indexes.
This is the part where I think she's talking about what you were saying.
No. It was actually earlier than that. I think the 2 minute mark.
This is it.
So go to the 2 minute mark.
I would take the other side of that bet because, again, I think ultimately they will bear more pain than I think market participants originally thought, but there will be a limit. And I think they will make deals.
There's a view in the market that Scott's preoccupation with keeping the 10-year yield low.
This is the part. This is where she talks about it.
Yep.
Foreshadows a coming change in bank regulation. if the administration wants to juice demand for treasuries, it could exempt treasuries from the supplementary leverage ratio, one of the capital penalties that the big US banks have to pay. Do you think they'll go there?
So I definitively think that is going to happen. So when you look at
Wow. So another person who's backing up this thesis that Trump wants to get the 10-year to come down.
kind of the net issuance of treasuries post-COVID, it's almost all been bought by the levered hedge fund community. And I don't think, first of all, that's not a sustainable kind of marginal buyer. And it also probably isn't good for market structure and market stability. And when you look at what came out of Congress
I'm gonna pause that for a second.
last week,
Okay, so what she's essentially talking about is, with all this new federal, basically that paper that's out there, if you allow hedge funds and PE funds to basically be the main guys who buy it, they are not reliable. Why? Because they buy and sell these things, right? So it's always going to keep moving up and down, and it's not going to give you like any sort of market stability. That's why you saw basically the 10-year go from 4.8 now to like 4.1 last week, and then it trended up to almost 4.28 to 4.3 again, all within like 1 week. That's really bad for trying to plan things out, right? So let's play the rest of it now.
NASDAQ, by the way, guys, just went down 4%.
deficit is not going lower in any material way. So what I think they're going to do is they will change bank regulation and the supplemental leverage ratio, allowing banks to buy treasuries in ways that won't be regulatorily punitive. And the next step is they will try to take some leverage out of kind of that basis trade in the levered market. And again, I think this is where Scott understands the moving parts in ways that I think will ultimately be really helpful.
You've given us a couple of clues about how you might be trading.
Yeah, I think your point is proved, Chris. I think so. So if banks can buy up more treasuries, that would obviously be net good. But
well, it would stabilize the treasury market a little bit, so the yields wouldn't fluctuate nearly as much. Not to mention yields would actually move down significantly. There's a lot of money sitting on the sidelines right now in shorter term paper that basically can be moved to longer term paper, or if the Fed were to signal that, hey, we're going to be cutting rates sooner rather than later. So right now, the data that you have to follow is just how close are we to seeing that happen?
okay, so here's the question: like, do you what gets Jay Powell to cut if that's what Trump wants?
Well, what's his job? He always says that he has two jobs: full unemployment, right, and market stability, price stability, right? So if he sees prices going down and growth slowing down, that is a reason to cut. If unemployment is starting to rise, that is a reason to cut.
But non-farm payrolls were good.
Yeah, but that's backward looking, brother.
So you think the labor market will get significantly weaker in the coming months, is your point?
Correct.
But what if it doesn't?
I
Because
mean,
then I think Trump's theory is screwed. If he doesn't get the wrong data, right? Like, why would Jay Powell cut?
well, here's the thing. Look at the stock market right now. It's going down, right? If this does not breed fear into the markets, all this tariff talk doesn't breed fear into the markets, I don't know what will. I mean, this is why you also saw the savings rate climb, right? There is generally a lot more fear in the market. So businesses, when there's fear in the markets, what do? They don't invest in more employees. They don't invest in, additional capital. All that money, all that liquidity gets frozen. And when that freezes, growth slows down. And once growth slows down, you got bigger things. Every single policy that the Trump administration has basically put up till now has been to control inflation, right? You look at immigration, right? Basically, there's little to no immigration coming into this country right now since the borders have been closed. Why? Because if you think about it, our population growth rate relies on a lot of immigration. If you don't let immigrants in, your population stagnates, right? You're basically not going to grow as much. But it also means the government's not going to be there to spend all this additional liquidity into into the economy to support these new arrivals,
Yeah,
right?
because a lot of immigrants get healthcare, et cetera, right? So
Yeah, so a lot of people are like, well, the government doesn't give immigrants anything. Like, yeah, but they basically support a whole litany of NGOs that basically provide all these services. All that money eventually makes its way into the economy. So by taking that away, you're taking away the liquidity punch bowl, So eventually the data will make its way into the numbers, but it's going to take some time for it
So then here's the argument for the elephant in the room is everyone saying, okay, so if Trump's tanking the market to get rates to come down, why shouldn't we sell stocks? What would be your response to that?
Because you never know when the reversal is, right? That's the hardest thing to do, which is try to pick an actual bottom. So I think someone said a while ago, like if you miss like 3 or 4 of the really good days in the market, you basically are underperform underperform. Not to mention you deal with all the tax liabilities of being out of it and getting back in and all that nonsense. So, this is where if you have some money on the side, that's where you want to just try to pick up things that long term you want to be in.
When do you think it gets bad enough? Like, do we need 10% down on the S&P for Jay Powell to realize that we're having a real growth scare, or is there a level in your head that you think it happens, or not?
I'm watching the senators and the House basically and their communications to Trump. The reason for it is simple. Without them, he is basically screwed, right? So he needs policy wins in order to succeed. Now, how do you get policy wins? Well, you need to keep a control of all the senators and the Republicans in the House because you have a very thin majority. So when they start to complain about something, then it ends up becoming more policy resistance. So right now, Trump is basically trying to do a continuing resolution to September, right? So in order for Trump to get that, he needs all the Republicans, like 100% of the Republicans in the House to vote for the CR. The challenge is if there's like House members saying, look, I'm getting calls from my constituents who are absolutely pissed off at the current economic situation. I'm not going to vote for your CR unless you freaking, moderate your tone on tariffs or this. He's going to eventually have no choice. Otherwise, he risks basically shutting down the government. And if he shuts down the government, then you really got to worry about recession because, you got all sorts of weakening happening. And if you start breaking things, it's going to be much harder to recover. So this is where you kind of just have to look at the public outcry also and how that'll impact midterm elections. I think from a timing perspective, I spoke to the other Amit. 6 months would be the absolute limit on how much you can deal with the downside move.
That's what I thought. That's what I thought as well.
After 6 months, I think it'll be a challenge because then what tends to happen is when the markets fall, the markets tend to recover, but it takes a really long time for them to recover, right? So the whole saying is when markets go down, it's like an elevator. When markets go up, it's like an escalator. And if basically Trump has to now force the market to go up for the next 6 months to a year, by that time the midterms will come and basically he's done for, So I think right now there's a lot of people that are pissed off at some of his policies. People who know somebody or who personally used to work in the federal government that may have voted for him and basically they're losing their jobs, right? If you worked for a nonprofit, that's another segment that lost their jobs. If you worked as a contractor, you were losing your jobs. Yeah, what he's doing right now is absolutely, in my opinion, necessary to get the budget under control and basically spending under control. But at the same time, I know that politically, because it's not a strong mandate, as basically he's saying, he's more likely to capitulate than not.
Yeah, and I think, by the way, guys, for those wondering who the other Amit is, me and Chris have a mutual friend named Amit as well. So that's who we're talking about. But the capitulation thesis, I think, is correct. Is every time he gets ready to put down the tariffs, we get an extension. And it almost feels, and I wonder what your perspective on this is, Chris, that he's hyping up the tariffs to create the volatility. But then when it's time to implement them and like actually, get the effects of them, he just delays it because he doesn't actually want the tariffs. Do you kind of think that's correct?
I think the goal is to use the tariffs to get policies changed. I don't necessarily. I think, I think if let's the question that I would have here is, if inflation was low, would he still do tariffs? And if you look at 2018, he would absolutely do tariffs, but he would probably do it towards just China, right? And I think ultimately that's what we'll end up with: China paying 20% in tariffs, Mexico and Canada getting zeroed out again.
Yeah.
I think that's where we end up. Like, the other thing is, long term, I feel like the Americans' main goal is to weaken China. And every policy decision I see is also geared towards, kneecapping them as much as possible, whether that be economically or politically. It's all about China. So if you look at the decisions that are being made, it's basically towards decoupling China from us. Hopefully it ends up working out, and that's something that we just have to deal with.
Okay, so I guess last question. This is an interesting one. And Chris, a lot of people appreciate your thoughts and opinions today, so thank you for taking the time. Do you think investors should have seen this coming when Trump
No.
won?
No one could have seen this coming. I'll be honest.
Why?
I think when he first came into power, people leaned on his like basically leaned on his past actions regarding the stock market and using that as a barometer. So people looked at that and said, well, you know what, if he did it in the past, he's more likely to do it now. And I think there's still some truth to it, but I think, just as what's her name from Soros management said, there's a level of pain tolerance this time that he has that's a little bit more than what it was in the past.
Mm.
So I think eventually we will see him capitulate, but it's not the same as it was before, So I think that's the only difference. So I think right now, someone said, "Oh, he's not." Well, he said, I'm not watching the stock market." Bullshit. Whenever someone says that, bro, that means that they're watching it even more than everyone else. So,
But he's sacrificing the market for these rates. That's the conclusion he's come to.
I mean, that's unfortunately how you get confidence down and you get growth to slow down, because otherwise you end up in a really bad scenario. I think the biggest challenge for us is making sure that we don't end up in stagflation.
Yeah.
Right.
Yeah.
Where you have persistent inflation while at the same time low growth. That's like the ultimate bad zone. So instead, it's almost like a controlled demolition, so that this way you can rebuild things,
Yeah. All right, Chris, thank you so much. Appreciate it. I will put your X in the chat, but X is not working right now for everybody. So hopefully that starts working in a little bit.
Yeah. I mean, this is the time where you basically just go to sleep, man. Don't look at the market. Like, the more you look at the market, the more you look at your portfolio, the worse you'll feel, the more likely it is that you'll end up being and don't be in short-term stuff. Like, if you're in short-term call options or anything, you're gonna get effed, because you don't know how long this is gonna last. I know some people, and dude, this is exactly why I am so anti wheeling. Okay.
Yeah, selling puts. In a bear market, you end up getting assigned on those puts.
Yeah, and the problem is, now you end up, some people go on the higher risk side and they start selling puts on margin.
Yeah,
and then it ends up going even into a worse situation, because now you're selling things just to cover your margin, and it just keeps getting worse and worse and worse. This is why when we were having that debate last time with TJ, it was like, well, if you wanted to buy this stock at this price, you should just do it. You sell some sell some cash secured puts. And that's where I have to remind people, just because you think this company is good doesn't mean that it's detached from the general market. And if the general market craps, then now you're going to get a whole bunch of these things assigned to you, you know?
Yeah, but the same thing also goes for leaps, though, right? Like your leaps are getting crushed. I mean, anyone's leaps can get crushed as much as their puts. It's just like in a red market, any way you play it, unless you literally bought puts, I mean, you're getting hit.
The best
Right.
thing about leaps is that you have so much time on your hands for that reversal. If you don't have time on your hands, that's the main enemy,
Agreed.
you know?
Agreed.
So if you really like a company and you know right now you think it's very undervalued, some leap plays are not a bad idea. The only thing is volatility is really high, so you want to kind of wait a little bit for volatility to come down. But
And you have to assume if you're buying a 2027 contract that the markets do get through this till 2027, right? Like you have to have the confidence that this is resolved by the end of 2025. 2026 is a good year. If you don't have that confidence, then you probably shouldn't get into a 2-year.
I mean, for me, it makes obvious sense to why to buy a leap because the market is, or at least the administration is going to make sure that they're going to be very supportive of the stock market because they don't want to be dealing with this during a midterm. You know, imagine right now, just imagine for 2 seconds. We had a really bad year this year. The markets are down 20% by the end of 2025, right?
Yeah.
And now they're slowly starting to recover. Well, guess what? Now the Democrats, bro, they got nothing but ammunition to take you out on. Crazy amounts of ammunition. Look at Trump. He screwed over the stock market. He got
But what if Trump gets inflation to come down aggressively and regular people can finance a car at 3% again versus 7%? Well, you and me are screwed, and everyone in the chat is screwed because we're investors. But the average Joe gets a lower mortgage rate. He's feeling really good about Trump, right?
Dude, the average Joe also has a 401k.
But Chris, most people are not like staring at their 401k, right?
No, dude, you'd be surprised at how many people actually look at their retirements. People have pensions. Okay, even sovereign wealth funds have a pretty significant interest in making sure the market is not like going down like crazy, and also companies. You know, so a lot of things are very fluid. So I would say if Trump doesn't want to get creamed during the midterms, he's got to start basically getting things to be better by the second half of this year. And I think that is what I'm relying on, which is self-interest in order to make sure that the economy and the stock market are relatively recovered by then, so that this way 2026 can be a much easier and smoother process of recovery and a growth stage, so that this way he can come in and say, look, the Biden administration messed you guys up. He left you with high inflation, all these debt problems. I came in, I had to deal with things, but I helped you fix them, you know? And those are the talking points that he needs in order to maintain the House and the Senate in 2027. So I'm telling you, if he loses either the House or the Senate or both, he is going to have 2 years worth of nothing but pain with these guys basically trying to impeach him over everything. And then there might even come after freaking Elon Musk, brother. You know?
I mean, I think they're already coming after Elon, right?
No, but with the power of with the power of Congress investigating everything, you know, bro.
Oh, you mean if they screw the economy so bad, you think they're going to come after Doge and all that stuff? Basically.
Bro, they are going to go after a lot of people, you know, and basically it's going to be bad. It's going to be really bad.
In general, 30% of GDP spend is government spend. Do you personally think that needs to come down?
Absolutely. I think the government, we tend to spend a lot of money on a lot of dumb shit. And the whole thing is, some of it I understand, like just it's liquidity that needs to make its way into the market. But you know, when you think of something like taxes and you're taxing, and I know this is going to sound bad, but if you overtax the job creators and the people who actually have real growth, and you take that money and just redistribute it to people who don't provide any real value other than, hey, I'm a human and I get to vote, then that's not good, because that means that there's no progress, right? You constantly want to reinvest in the country, and you want to reinvest in the people who are going to make the country better and better and better and make it bigger, right? So you want to invest in entrepreneurs, you want to invest in students, you want to invest in people with great ideas, you want to invest in, you know, in research institutions, but you don't want to invest in basically, like right now, like how much money did the federal government spend in New York City? Not just the federal government, but people housing migrants in shelters that were owned by, like, in a hotel building. I mean, dude, that's
It was
very
it was a
inefficient.
couple hundred million, I think 300 something million.
$300 million. That's a freaking crazy amount of money for what? You know, it makes no sense to have that. Imagine that 300 million went to scholarship programs for gifted kids, you know, who wanted to you know, pursue a degree in STEM fields, or give that money at, you know, to basically SBA to do loans for small businesses.
But,
Which
but,
one
but if the government isn't spending for our GDP, do you think we can make it up in the private sector?
only if you support the private sector and unleash the private sector to do what it does. And one of them is take risks, you know.
Yeah.
If you lock away the private sector, you overregulate the private sector. There's no incentive to keep going. So that's the thing. Like, the more you, that's why you have this, like, that curve. I forgot what it was called, but basically, the more you tax people, the less incentive you're giving them to develop new new things. Look at the Europeans. The Europeans have some of the worst. I mean, I don't want to say the worst, but they have some of the highest taxes, right? But that also means that the amount of people doing actual innovation, they're not rewarded. And if they're not rewarded, then people don't do it. That's why they're much weaker than we are when it comes to growth.
Yeah.
You know, overregulation is a really big problem in the European by the Europeans, and they're paying the consequences of it.
Yeah.
You know, so I honestly believe the Trump administration is doing the right thing for long-term growth, but the short term, we're gonna feel the pain, and we're just gonna have to live with it. And I think we'll get through it.
Is there anything you're buying right now or holding on in cash?
I have to do a giant Patreon post about this, but I'll tell everyone here. Look at Venture Global, VG, baby. I am so heavy in Venture Global right now, and I'm buying more by the day. Literally, all I've been doing for the last like 2 weeks is searching natural gas vessels, tracking natural gas vessels on Vessel Finder, looking at how many cargoes are flowing through their new projects, what the current Henry Hub price / the TTF prices are for the spread price in natural gas, what the storage levels are in.
Well, we'll have you come on another day to give the thesis, because I know it's a long one, so you can explain it another day.
Yeah.
But yeah, so you're going to natural gas as like a
Well,
kind of
this one specifically, this one is the one that I really, 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 really like. If that isn't enough reallys, I could throw a few more on there for you.
Do you think TLT is the safe play right now?
Yeah, but a lot of the juice has been squeezed, so there's not much juice left. I don't think the 10-year can go beyond probably like 3.5. I think more now. You kind of like, if we get to 3.5 on the 10-year, then that means that the Fed is already really too late in the cutting cycle, and that they're going to start cutting a lot. In which case, now the short end should start to materially go down. That means that we'll see an accelerated pace, but I don't think that the 10-year is going to go down too much. Unless like we're in like recession, then the freaking 10-year could be at 2%, which means that the price of TLT could be at like 105, 110, something like that. So in my opinion, there's not enough juice on it. The good thing is you're still getting a pretty good yield, and it pays monthly right now.
A last question, LMT. Why do you think Lockheed Martin's up?
War, baby. War. That's it.
Yeah, probably why.
You know, when there's war, it's good for everyone, right? So, well, it's good for defense contractors.
Good for defense contractors, yeah.
Yeah, I mean, the Europeans are stepping up, saying they're going to buy way more military hardware. Yeah, that's pretty much it.
All right, Chris. Thank you. Appreciate your thoughts. Maybe we'll talk to you
Yeah,
later.
everyone on the market right now, just chill, guys. Everything's okay. All right. Everything's gonna be all right. Every time these moments come, we dealt with this in August. Y'all remember August of 2024? Everyone was crying, oh my God, Japan carry trade. Look, everything is gonna melt down. And after like a month, everyone's like, oh my God, everything's great again. You know, we saw that happen. What are some of the other times where we saw massive drawdowns the
Well,
last few years?
September, we were down 4%. September 2024, we had a rebound. February 2024, we had a rebound. August, obviously.
Yeah.
October 2023. Like, I mean, if it's a good company, you tend to rebound.
Exactly, man. Just chill. This is not that. I mean, it sucks to see it in your portfolios. To be honest, it really sucks. That's why I don't open my portfolio. That's my strategy. when there's red days, you just don't look. Okay, I don't like Chris. How much are you down right now? I have no idea. You know, if I don't see it, I'm not really down, am I? I only look at my portfolio when days are growing good and it's green. So I'm like, oh, look, I'm doing really well. You know.
Whatever you
I
got to
mean,
do to protect your mental health, right?
You have to keep looking at it because you're one of those guys, but no, not me, man. Not me. I'm like Jesse Dow on crack, bro. Jesse don't mention how much he's down right now. He's chilling, bro.
No, I mean, even Derek looked at his portfolio for the first time on Saturday because I called him. I was like, how much are you down? He's like, I don't know. I was like, why don't you go check? He was like, no, I'm not going to ruin my weekend. 5 hours
Yeah,
later, he calls me.
it's all a
He
mental.
calls me 5 hours later. He's like, my weekend is ruined. I'm like, well,
Yeah, it's all a mental game, bro. It's all a mental game. As long as you're in it for the long haul, don't look at the portfolio on red days. Okay, that's it.
that's the trick.
And have enough money on the side so you can eat for the next couple of months just in case. You know, me and the wife, I was telling her, I was like, because you know, we have this money sat on the side to buy a house, right? And I'm like, honey, you sure you want to buy a house this year? You know what? Maybe we should just, you know, take this money and park it in some. And she's like, no, hell no, we're not doing that. All right. And I was like, okay. So I've got all the houses that we've been going to for the last week, I've hated. Why? Because every time I look, I'm like, fuck that. I'm not paying no fucking $5,000, $6,000 mortgage. But 2 weeks ago, I was like, man, we could afford this. It's not a problem. My wife's like, oh shit, you changed, huh? And I was like, well, it's not me.
Like,
Man.
I didn't change. It was Trump's fault.
It was Trump's fault. Yeah, exactly.
All right, Chris. Appreciate you, man. Thank you.
Take care. Have a good
Take
one.
care.